Hey, what's up, everybody? I was not going to do this, but I got to talk about SoFi. And the reason why I'm talking about SoFi is not because something drastic happened, because of course the stock is asleep, right? For the most part, it cannot break above $7. However, the tide has shifted, and us retail investors aren't even aware. And everything is happening as the hedge funds want them to, and I'll explain. So, check out these screenshots. Blogger trends. 92% of the bloggers or whatnot are bullish on SoFi. 58% from Stockwits, 18% Seeking Alpha, 11% Investor Place, 13% other, whatever, right? That's the distribution of the bloggers, okay? So, this was in the red right before Q4, okay? Just so everybody knows, right? So let's keep it going. Check this one out. All of these bullish financial blogger predictions, okay? These aren't analysts, these are bloggers from 11 days ago. Okay? Again, green. Now, this is TipRank's SMART score of a perfect 10. It's very hard and very rare to find a company that gets a perfect 10 unless you're part of the Magnificent Seven or whatever you want to call them, right? This is absolutely insane. The reason why is because not long ago, this was a damn 3, okay? And I'm talking within 3 months, okay? Stay with me. Now, check this out. Hedge funds increasing their positions. Insiders increasing their positions. News trends are more bullish. Guess what's negative? Investor trends. Guess who the investor is? Retailers. So while all of the hedge funds and all of the insiders are buying shares, retail investors that are, and I want to say most of them, it's two types. One, you've either been in SoFi for so long that you're just getting tired of them. Like you're just getting tired of the stock going nowhere. And or B or two, you're like a newer investor, or you're new to SoFi. You don't really understand the company or the history of where it came from to where it is to where it's going. Now, those that have been with SoFi for a long time, hopefully you're educated by now, especially if it's been, I don't know, several quarters, right? However, those people, you people, whoever, right, who's had SoFi for, let's say, over 6 months or over a year, you've held on this long through all of the issues, right? And you decide to sell when SoFi is reporting back-to-back profitability, when SoFi is making acquisitions or partnerships with the NBA, with the NFL, with TGL Golf. I mean, what are we doing, right? This is what we call, or this is what I think they call dumb money. I think we really need to think about why you invested in the company in the first place. Anytime you're thinking about exiting, you have to think back why you invested. Because if you just exit abruptly, you're probably doing that based off emotion or frustration. And you have to understand that the stock market is boring, right? Things don't happen overnight. Now, I understand if you are either selling out your position or reducing your position, taking profits or whatever, and you're putting that money to work. Because, of course, anybody that's held SoFi for this long, you probably could have made 10 times your money if you were doing other things or invested in other companies such as like Nvidia, right? It's a good example. But here we are, okay? Everybody else, all the one percenters of the world are buying up a company that's profitable, and the retail investors are selling a company that's profitable, even though they're getting it as at a discount. Understand that SoFi was a SPAC company. The SPAC average price is $10. Anything under $10 on a SPAC company that's actually doing numbers is a discount. And I've told everybody, anything under 8 is a date. I'm buying SoFi. I buy SoFi every day. Now, I understand I might die on this hill alone, right? But we will see. Yes, I could take my, I don't even know how many shares I have anymore. 35, I don't know. Anyway, my thousands of dollars of shares, tens of thousands of dollars of shares of SoFi. And I could just sell that out, and I'm still within profit. So I could just take that and I can put that towards anything I want. I can become a little bit more diversified in my portfolio. But for me, this is high. It's not that much of a high risk anymore. At first, it was, but for me, there's a greater return. How I look at SoFi is that there's a greater return on my investment by keeping my money with SoFi for the long term. So I'm thinking 500% of what it is right now. Is that right? I'll have to double check my numbers. Anyway, either which way, let's say it's 200, 300% of a gain from where it is now. What company do we know right now that we can confidently say, actually, you can't be confident in any of those, but at the end of the day, I feel more optimistic about SoFi 10xing my money over legacy companies or legacy banks or whatever that is already kind of hit a peak, and they at this point they're just growing kind of gradually, right? So anyway, not done. Swipe over. This is the investor trend. I just want to keep going here. The average holding size right now of all SoFi holdings is 3.86% of their portfolios. On average, those investors allocate about 9.5% of their portfolios towards SoFi. Okay. In the last 7 days, investors' portfolios have been reduced by 0.65%. Over the last 30 days, nearly 4% reduction in SoFi stock by retail investors. The individual investor sentiment is very negative. And that's huge because that tells me that all of us retail investors are selling the heck out of SoFi. You know what? I get it. I mean, you do you. There's money to be made elsewhere. 100% in this market. It's really hard to ride it out with a company that kind of is like rolling at a disadvantage. It seems like at face value, it seems and appears that legacy banks and these analysts are all wanting SoFi to fail or are shorting the heck out of SoFi because they don't want to see them like become as big as them. And I understand that. But again, they're showing you one thing and they're doing another thing. And this is, what you need to think about. Not financial advice, but I think Keenan Grace always says, somebody I follow and I'm in his Discord, he always says, what are the big dogs doing, right? Because they can show you one thing and they can say they're shorting and they say they're selling, but numbers don't lie. When you look up their forums, it shows that they're adding their positions, right? So it's really easy to manipulate people because all we do is read headlines. And then even those headlines and this company that are posting those headlines are paid by these institutions and hedge funds. I can't say that with certainty. I'm not trying to get sued. This is just my assumption. All right, so don't sue me. I'm just assuming that, people are paid off to pump out fake information to scare retail investors like that out of their positions. Why? So the hedge funds can get the majority share, because right now the retail investors are still in control, but with a very negative sentiment based on the activity of 737,000, let's just say 738,000 investors in this quarter. It seems like they're going to be tracking to be the majority holders of SoFi. Now, that's okay with me, right? Because I'm not selling my SoFi. So y'all can keep selling and give them control. Because what happens is once they have control, they can pump the stock. And then they can make hand over fist for a profitable company. And guess who's going to be right there with them? This guy. Now, I could be 100% wrong, and so if I could go into the toilet, but that is a risk that I'm willing to take. I just don't know. Until the fundamentals of the company change, I'm standing my ground with SoFi. So what it is, I'm not going to bore you with the technical analysis because we already know what that is, right? I will say that the cup and handle pattern that I posted is still active. Technically, SoFi is trading above the halfway point of the handle, right? Which tells me that there's some strength there. But how far down it goes, I don't know. But it has to get over $7. Then 8, then 10, then 13. We'll see what happens. But I don't think SoFi is going to move much until earnings, unless some big news comes out where they report on something or change their guidance or something. But otherwise, it's probably going to be sleep for this long. Next slide, right? Analyst forecast. On the low, they have SoFi at $4. The high is $14. And the median is $8.91. Where is SoFi right now? Don't worry, I'll wait. I'm just kidding. Nah, SoFi is at like $6.98 or something like that. It's been floating under $7 for a little bit now, right? So buying SoFi right now is like buying it at a discount, because the median of SoFi is $8.91. That's why I always say anything under 8, sign me up. I'm buying SoFi. If it drops down to $4 and the fundamentals of the company does not change, and there is no concrete reason for it to fall that far, I'm buying SoFi. But guess what's going to happen? A crap ton of retail investors are going to get shaken out of their positions because they're bleeding. That's just the way the game goes. But you gotta have some cojones, I suppose, or just be smart with your money. At the end of the day, it's your portfolio. You do what you want. But if you are an investor in SoFi, and you're thinking about getting out, do what you got to do. But with any company, any stock, remember why you got into it the first place. My biggest mistake was when we had this COVID crisis and the stock market crashed. I had AMD at $88. I had Google at, I don't know, 80 something, $90. I don't remember. It was low for Google too. I had all of these blue chip companies. I had Tesla at $79, $80. I don't even remember. I had all of these companies at such a low price, and once it hit close to like $100, they were still pumping out FUD and talking about recession, and I was fearful that the market was just gonna bleed back down. So I ended up selling those positions. And that was like a rookie trader mistake. Because if I had held those positions then, today, can't even imagine where my portfolio would be. Completely different, right? So I say that to say, don't get scared out of your positions. This is not financial advice, but if you did the research on the company, trust your research, trust your process, because the moment that you start questioning that is the moment you get smoked or you miss the boat, right? So I guess that's all I got. This is Stocks for Real. Out. I'm back. I went away, I ended the video, and now I'm back. But why? Because I forgot a slide, and it's pretty important. Next slide. SoFi's website traffic growth is up 133.71%. Look at the monthly comparison from 2023 to 2024. We went from 6.23 million to 14.56 million in website traffic. Guys, SoFi has so many eyes on it right now. However, we are looking at the chart and we are like getting nervous because it's asleep. The best thing for anybody to do, not financial advice, but even myself, is to have what you have in SoFi in a portfolio and forget about it. Forget about it for 5 years, 3 years, and see where that portfolio is. You know what? This is what I'm going to do. I'm going to start a small position of SoFi in, what's an app I don't use much? Public. I'm going to use the Public app. And I'm probably going to put like $200 to $500 into SoFi. I'm going to dollar cost average that $200 to $500. Let's see, over the course, I want to say daily, probably daily for 3 months. I'll double check that because part of me wants to get it in before earnings, which I think is in August. So, yeah, I'll get back to you on that. But I think I'm gonna do about $200 leading up to earnings, and I'll dollar cost average it every day until that point in Public, and then I will just leave it. I will shut that app down, and I won't look back for, let's say the beginning of 2025, and see where it is. All right, that's it. Have a great weekend. Stocks for Real out.